dividend investing can be a great way to make some passive income on a regular basis. However, it may take many years before you start to see any significant returns. But what if there was a way to use dividend income to retire earlier so you could really take full advantage of your youth? We'll discuss the quickest ways to rely on dividends in today's video. But before we get started, please make sure you like this video and subscribe to our channel for more awesome content. Purchasing stock in businesses that regularly distribute dividends is known as dividend investing. The benefit of this technique is that it offers a stream of income independent of the ups and downs of the stock market. Instead, dividend investors receive consistent payments based on the company's profitability. This may offer a more consistent return, which may be appealing when planning for retirement and during bear markets. Warren Buffett is one of the most well-known advocates of dividend investment. His systematic approach has enabled him to become a phenomenally successful investor. Therefore, dividend investing is an excellent place to start for those looking to follow in his footsteps. The amount of money you need to invest to generate enough income from dividends will vary depending on your lifestyle and spending habits. The U.S. Bureau of Statistics estimates that the average American spends about $67,000 annually. This number comes to almost $5,600 each month on average. Everyone's spending needs are different, so it is essential that you assess your own habits and adjust this number accordingly. By being smart with your spending, a modest investment in dividend stocks can provide you with enough income to cover regular living expenses and also have some extra money for leisurely activities. Naturally, the more money you invest, the higher your income will be. But if you want to use dividends to retire as quickly as possible, you might be shocked at how quickly you can actually do it. For the sake of this video, our income target will be $40,000 per year, which should be enough to cover most of the people's essential living expenses. Dividend investing is fundamentally a long-term strategy that requires discipline and patience. However, there are two key dividend investment tactics that you can employ to quicken the process and move closer to obtaining financial independence. Utilizing covered call ETFs is one of the quickest methods to live off dividends. Investors can profit from both dividends and stock appreciation with the help of covered call ETFs. The ETF invests in stocks but also generates extra money by writing call options on the same stocks. Call options give the buyer the right but not the obligation to buy a stock at a certain price within a specific time frame. So when the ETF sells call options on equities in its portfolio, it receives premium income that is distributed as dividends. Additionally, capital gains may also be realized if the stock price increases above the call option strike price. Some of the most popular covered call ETFs include QYLD, XYLD, and RYLD. These funds have attractive yields in the double figures, which is significantly higher than the yields of many traditional dividend stocks. The 12-month trailing yields on these covered call ETFs are QYLD with a 14.1% yield, XYLD with a 13.97% yield, and RYLD with a 14.05% yield. These ETFs have the advantage of offering income from both dividends and option premiums, resulting in a more consistent flow of passive income. These ETFs do carry some risk, though, as the stock price could drop sharply and cancel out the premium income received from the call option with a capital loss in the stock price. So, the question is, how much would you need to invest to retire with covered call ETFs if you wanted to earn $40,000 per year? Well, based on the current yield levels, you would need to invest anywhere between $250,000 and $300,000 to generate $40,000 each year. Not bad at all, right? Particularly when compared to regular dividend equities, where you would need to spend about $2 million to generate the same level of income. The second strategy for living off dividends is to put money into high-yield real estate investment trusts, or REITs. REITs invest in properties that generate revenue, such as office buildings, residential complexes, and shopping centers. These businesses frequently distribute a sizable portion of their profits to shareholders in the form of dividends. The top REITs for dividend income include Omega Healthcare, Blue Rock Residential, and Apollo Commercial. These REITs have a strong track record of dependable dividend increases that give their shareholders a regular cash flow. REITs investments are advantageous because they provide higher dividends than conventional stocks. According to CBRE Investment Management, the last 20 years saw an average annual return of 10.8% from U.S. REITs. Due to a variety of factors, including occupancy rates and market conditions, these yields can fluctuate greatly. However, because these businesses are more likely to be impacted by economic downturns, they also carry a higher risk. So, if you wanted to make $40,000 per year from REITs, how much would you need to invest? An investment of about $400,000 would be required. This is based on an average yield of 10.8%, so the actual figure will change depending on whether you diversify your investments across several REITs, or put all of your money into one. Realistically, you could use REITs to fund your retirement by making steady weekly investments and reinvested earnings until your portfolio reaches the size you want. It is definitely possible to achieve financial independence through investing in REITs in as little as 5 to 7 years with the proper patience and dedication. The final thing to remember when investing in dividends is that you should always have a plan. You should be well aware of your financial needs and objectives. This will enable you to choose the best stocks for your portfolio and ensure that you keep to your long-term strategy. To do this, you must determine your living costs and ensure that your investments produce sufficient income to pay for them. Depending on your circumstances, you might be able to live comfortably for less than $40,000, or you might have a family and require considerably more to maintain your preferred standard of living. It's also important to note that, in contrast to regular dividend equities, covered call ETFs and REITs frequently distribute profits to shareholders on a monthly basis. Due to this, both of them are now much more desirable options for investors hoping to profit consistently from the stock market. There you have it. Financial freedom can be attained by investing in businesses that generate reliable, consistent dividends. It's also crucial to comprehend the risks involved with any investment, whether you select stocks, ETFs, or REITs, and to create a strategy that matches your risk appetite. Through dividend investing, you can quickly reach financial independence with a little bit of patience and dedication. What do you think? Would you invest in covered call ETFs, or perhaps REITs are more your style? Comment below with your thoughts and let us know. Please share this video with all your friends so they can also know about the fastest way to live off dividends, and if you have not already done so, please subscribe and leave us a like. See you in an upcoming episode.